Hello, beautiful people. Welcome to Altcoin Daily with Bitcoin Gorilla. Well, I am back, and this time around, I want to talk about DYDX. Now, if you bought this token is not longer than 6 months ago that it was introduced into the exchanges in the crypto community where you can trade it. Now, since this 6 months ago, after the first month of it, we are going to be using Binance in this analysis. So since the first month of being traded on Binance, this coin has seen nothing but the downside. So I am here today to talk about how we can manage loss on this coin while waiting for price to return back to where we enter or even move above it. Now, so this video is going to profit if you are an investor into DYDX. It's going to help you, especially now that the whole the entire crypto community has been experiencing downside in the past few days. So this will help you control losses. Now, this does not guarantee that you're not going to lose, especially because you're already in loss. So I'm just here to say one or two things, share my trading psychology, and share how you can manage this risk, how I am managing it here at MAKAVELI Traders. I remember Bitcoin Gorilla. If you end up liking this analysis and strategy, just make sure that you subscribe. Remember, we're going to come back and draw this chart. But first of all, let's jump right and look at the statistics of DYDX and understand what even this token is, because it won't be nice or fair if we are talking about price and don't understand the fundamentals of the token. So the token itself is currently trading at 5.91 dollars, so $5.91, of which it has seen an upside of about 14% to the upside. Now, if we look at the statistic, the total supply is about 1 billion tokens, and the maximum supply is also 1 billion tokens. Now, about 17% has gone into circulation, and the current figure is around 65.569 million tokens, approximately million token. So when we're talking about the market cap, the current market cap data is around 387.505 approximately. So $387.505 million approximately. I want to repeat that. 387.505 million tokens approximately. Now, when we talk about the upside, this market cap has seen the upside of about 14%. So this, if we talk about the all-time low now, when the price was listed, it was able to go up as far as $27. That was around September 30th, 2021, 4 months ago. But this token has dumped to where it is now, around $5, which means it has lost about 78% since this coin was listed about 5 months ago, right? It's 5 months ago. That's when it comes out. Let me not say 6 months. So, what is so unique about DYDX? What is even DYDX? You see, DYDX is a cryptocurrency exchange that combines advanced financial tools with decentralization. This platform, you see, don't compare, it is not the same with other platforms. You see, platforms like Binance here is a centralized exchange, which means the owner of Binance has a say, and me and you don't have much says when it comes to making decisions that go on and how things are distributed. But when it comes to DYDS, this is a decentralized exchange. That's the first thing you must take note of. So apart from the fact that it's a decentralized exchange, the platform supports margin trading, a financial product enabling investors to increase their exposure to digital assets through leverage. So, if you don't know what leverage is the advantage that even with lesser capital, you can borrow and then take advantage of buying a market that you don't even own. That's margin trading. You don't own the market, you don't own the coin, you leverage the coin. I don't know if you know about futures. This is what they are talking now. DYDX isolated margin allow users to assign particular funds in the account as part of the trade, while cross margin utilizes all the assets a trader keeps on the platform. You see, perpetuals, which is the futures aspect of it. Now, if you don't know, is a type of futures contract that does not have a predetermined selling date. It's also available for trading on DYDX. Now, the exchange currently offers about maximums of 25 5x leverage. Well, compared to Binance offer maximum of about 50, depending on the token. 50 for some altcoins, some are even 25, and some are 70. I know Ethereum is 70, and I know that Bitcoin is 125x. So big Binance is quite very larger than this exchange, but this exchange has the advantage that it is decentralized. Nobody has the total power to change everything just when they like to. It is decentralized, which means power is in the hands of the people. The exchange currently offers a maximum, like I said, of 25x now, with no expiring date. Now, upon depositing your funds into the account, right, the DYDX user will automatically begin to earn interest. You see, without even doing anything, you start earning interest as their assets are entered into the global lending pool specific for each cryptocurrency. The platform guarantees security for lenders by ensuring that borrowers have enough collaterals in their account all the time, meaning that borrowing on DYDX enable users to instantly acquire any asset available on the platform using funds in their possession as collateral for the loan. So let's say, for example, let me break this down. Let's take, for example, I have Ethereum, right? And I want to trade DYX, but I don't have USDT to buy DYS, right? So instead of selling my Ethereum, what I would do is I'll go to the platform and tell them that I want to give my Ethereum as a collateral for them to borrow me any coin or maybe USDT to go and buy any coin of choice. And not just that, they could just give me DYDX depending on what the exchange is. You see how easy it is? So I don't need to sell my Ethereum, which means if Ethereum is going up, I will still retain the profit on my Ethereum. Meanwhile, I will borrow money from them using that Ethereum as collateral to go and buy another coin, which means I'm having two coins now. So if it turns out that it goes up, I am benefiting from both ends. So by the time with no expiring date, that's very important. No expiring date, which means you can borrow for as long as the pump keep going. If you know coins like Bitcoin pumped throughout 2020, in fact, all most crypto pumped for so long. Imagine borrowing and just waiting till the pump end, and you just sell and you take your profit on Ethereum, and you take your profit on the coin that you borrowed, and just at the end of the day, you are in big profit. I think that is what they are doing that other exchange like Binance are not doing. Now, together with trading and liquidity providers reward, DYDX introduces retroactive mining benefit, allowing the platform to show appreciation to historical users and incentivize them to trade on layer 2 protocol. Now, the holders can stake their tokens in DYDX safety and liquidity pool, while the safety pool provides the platform with a safety net in case of shortfall event. The liquidity pool serves to attract high quality market makers. So personally, I do not trade in this exchange, so I'm not going to give you the wrong information. So I don't know much about the exchange. I don't know literally how to use it because I have never traded in the exchange. I personally, I trade with Binance. I'm very honest. So this is the liquidity pool. This is the exchange. This is what their exchange looks like. These are the an overview of what your wallet will look like and the trade and all of that, the execution. You can see if we look closely, we see that there's Ethereum, there's Bitcoin, which means you can actually deposit any coin and use this position. So you can see you create orders. These are reward. This is where you're going to see your reward and the fees and all of that. So back to their website. This is the website. Now on this website, this is their staking and the governance, and this is the data, the current data. Like I said, distribution currently today is about 27,397.26. That's the total distribution distributed today so far. So this is the website and is an exchange, a decentralized one. Now that we know, I want to talk about the market. Now, I know that DYDX has been dumping, and if you look at this chart, it does not look good at all. And this is the reason why I'm going to talk about how to control loss, how to reduce your loss, the current loss, to about 30%. Why still waiting for price to recover itself? So the question is, why the price has dumped? Maybe you bought around somewhere around here or around here. The thing I'm telling you is now you can reduce your loss, that so that, because I'm not telling you that you're not going to see a loss, but it is going to be what is called an imperishable loss, which means if you're patient, the loss will come back as profit. But two things are required from you for this to work out is: one, you're going to be very patient, which means your time is going to be required. So this is only going to benefit those who are in this crypto for long term. So if you are in this crypto for long term, then this is going to help you reduce your loss. I'm talking about staking, but personally, I do not use the DYDX exchange. I use Binance. And in this video, I'm going to take my time to walk you through how you can reduce your loss, right? So remember, this is no financial advice. This is no financial advice. As of now, today, the crypto community has gradually start recovering, of which we're seeing some positive sign. But the question is, the dump has been so bad that so many people are worried. If you're worried, I want your mind to be at rest, especially if you're a holder, right? So if you're a holder, this is how I handled my own situation. This is why I'm sharing it with you. What I did is I took my DYDX to Binance. When you bring your DYDX to Binance, I brought it here, and then I go to in on the top bar. You will see, you, if you've not registered, you register. If you've already been using Binance, that makes it easier for you. So you come at the top, you're going to see where they say in, and at the top where you see in, you're going to scroll down. So when you scroll down, you're going to come to the point that says staking. So you click on that staking. Now I want to share this with you. The whole entire community of the crypto trade, the whole entire crypto trading community has been down. The whole market has been down. I don't want you blaming yourself for buying the wrong coin because you bought DYDX and then it dumps, and now you're feeling guilty and blaming yourself why you always buy the wrong coin and why you are always falling victim. Maybe this is not the first time, but really, who can actually escape it 100%? Nobody. At some point, most of us get still hit by this market. We can predict it, but majority of the time, our minds play games with us, and it's not your fault. This is a game of the mind. The market makers are against you. Even the next trader is against you. Why? Because if I'm buying and you are selling, when I buy and you are on sell, I'm going against you. And if I'm on buy and you are going to sell your coin, probably you don't mean no harm to me. You just want to take profit, right? So you taking profit will definitely affect my position because I am also on buy. So all these kind of things is what you think about and see that nobody can actually run from it. But the most important thing is learning to control your risk, especially if you intend to make good profit and if you're going into crypto for the long term. Now, if you're a daily trader, I'll come to your aspect. But if you are an investor, which means you believe that this coin has potentials and decentralized exchange is likely going to take over in future, which I do see coming, especially the fact that they have this fact that you can borrow and not lose or sell your coin no matter the situation. That is beautiful. What I am saying here is this: I want you to stake your coin. So let's go back to staking, right? So when you come back to this point, at this point where you are, you, like I said, you go to in, on in you go to what, staking. On staking, it brings you to this particular page. So when you arrive at this page, there are two types of staking. One on this point is called locked staking, which means you're going to lock the time until the time exhausts here. Aside from lock, you're going to see the one that's on the other side. The next tab says what? DeFi staking. So this is DeFi apps. So DYDX is one of the DeFi apps. But one thing with DeFi apps is you must know that staking has advantage and disadvantage. This is why if you don't know and don't know much about staking, you might come and learn with me. So as I'm saying, DYDX is currently, you will get a return of about 41% if you're staking for um the duration of 10 days, and if you're staking for a duration of 1 month, you're going to get about 25% annually. Now this is an estimated value. Now one thing I want you to know also is that these values change daily. Why? Because of the amount of trading, the amount of people who stake, and the whole thing that goes on in the whole staking community affects it. The fact that this is why it is being calculated daily. Now, this is what I'm going to tell you. The fact that you stake your coin does not mean that you lose everything or you're going to make profit. How it works is this: you're going to make profit actually. How it works is this: depending, if you bought the coin when price is here and then price start dumping, even if you're staking while price is dumping, even if you're staking while price is dumping, it's only going to your coin, your DYDX price is still going to, if you bought like 10 DYDX at the price of what, at the price of $10, right? If it goes down to $5, you will still have your what, 10 DYDX. But this time around, instead of what, instead of being $100, your DYDX will be what, $50. So if you want to stake, you want to stake the fact that instead of losing an entire $50 because of how bad the price has done, you are losing just probably, with the return you're going to get from the staking, with this return about 25%. It means you probably be losing 25 about 70% of $50, right? You're not losing everything, but just something returned back to your pocket to compensate you. Now this is just every 30 days, right? So imagine now the market we are is going to need patience, especially with the way Bitcoin is acting. The market is going to require patience. So if you are able, instead of just taking the big loss you are already in, because most of us could not exit even when we are seeing the dub, we were so dumbfounded by it that we got shocked and we just couldn't press the sell button, and we are still in the trade right now. This is who I'm talking to. Those who are still holding, it is a good opportunity for you to stake the coin, be correcting the reward, because at the end of the day, by the time you unlock your staking, you're going to still have your 10 what, DYDX plus the reward. So you can sell your reward and sell the DYX. If the DY, let's say you bought at, like I said, $15, and then, or $10, by the time it returns back to the $10, you have back your initial money you put into the, that's the $100 you put, has returned. Because the risk, I said, there's a disadvantage and advantage. The advantage is just what I'm saying. The advantage is by the time it goes back up, you are going to get $100 plus the profit, the reward you have collected from your staking. And then if it goes higher, you're still collecting from the reward and still collecting from the profit on DYX. Now disadvantage is this: yes, depending on the fact, you must understand that there is something called imperishable loss, which means price is likely going to keep going down and your value of DYX is going to keep going down. So like I said earlier, if you bought it at $10 and the price start keeps dumping, right, it means that your DYX is going to keep dumping. So if you got angry and said you're tired of holding, you just can't wait it any longer, you find yourself selling it at lower price, because even if you collect the reward might not be able to balance the loss you have already acquired on the DYX. That's the disadvantage. This is why, in fact, once you buy a coin the first time, go and see if it can be staked, so that at the point of buying, you start receiving reward. If things go your way, you can collect the reward, and if things don't go, you exit, right? This is good for spot traders and for investors. So, the next thing I'm going to say is that time might not permit me to run this analysis. I really want to run this analysis, so I'm going to take the time to make another video that is going to be strictly enjoying the chart, because talking about the DYX, so the next thing you do is just come here, you click on stake now. So when you click on stake now, it's going to bring you to your the next, I'm not logged in this account, so please, it's going to take you where you're going to choose how many DYDX you need to lock. So I'll make another video as part two. So this is part one. Part two, we will talk about the price and see where price is going, even while you are waiting with your coin stake. How long will it take? Where are we going next? I remain Bitcoin Gorilla. Subscribe and happy trading. Look forward to my video. Thank you for watching.